All right, last question. It comes from Sriti from Twitter. And he writes, if a business declared bankruptcy, so what happens to their stock? The question arose due to the Sports Authority news. I assume Sports Authority declared bankruptcy.
They did. And actually, Sports Authority is not a publicly traded company at this time, so it doesn't really apply to that. Although I will point out that this is one of those things that could potentially really drive me crazy because it used to be publicly traded and it was taken private through a leveraged buyout. And these things are crazy because basically what these firms do is they say, we're going to borrow a lot of money to buy you, but we're going to make you, the company, responsible for the loan, and we're going to pay ourselves a big dividend in the process. Part of why Sports Authority is going out of business is because the debt that was used to take them private is so big they can't cover it. Ugh, it drives me nuts. Any stock that has declined in value and it's not in a retirement account, you can write that off as a loss. It first offsets any capital gains that you have, and then you can deduct up to $3,000 off of your income for that year. Anything beyond that $3,000, you just carry forward to year after year after year. I know people, subscribers, who have such big losses from the dot-com bust that they're still able to deduct $3,000 every year off their tax return due to those losses. You can carry them forward indefinitely.
But essentially, it's just the stock is worth nothing.
Right.
You still hold that, not literal piece of paper, but you still hold that share, and it's just got a big old zippy on it.
Right. But the trickier part about this is if you sold a stock, you would get a statement from your broker at the end of the year saying you bought it for this price, you sold it at this price, and that's what you report to the IRS. For a worth of security, you didn't sell it. It's just worth nothing at this point.
Yeah.
And so, you might have to get some proof. It might be a letter from your broker or documentation that when the stock was delisted. And with a worth of security, it is always considered that you sold it on December 31st of that year. And that's important because that could help determine whether it's a long-term loss or a short-term loss.
Oh, okay.
And the rules have gotten easier since 2008. It used to be kind of difficult to declare a capital asset a worthless security because sometimes, even after Chapter 11 bankruptcy, there's still some nominal value to that security, and you could only claim the delta instead of it being zero and claiming the full amount. But that should not be, I think, getting a letter from your brokerage firm should qualify and you should be fine.
Right, and that's a really good point. Just because something went bankrupt doesn't mean it's out of business. The stock could be worth pennies, absolute pennies, but it's still worth something. So if you want to take that loss, you have to sell it in the open market and then use that as the information you use on your tax return.
So when does a stock is finally worth absolutely nothing when the company goes completely out of business?
It's delisted. You can't, there's no way for you to sell it. There's nothing to sell anymore.
Yeah.
The shares aren't on an exchange anywhere. The only value it has is if you had the certificates, you could sell it on eBay. That's about it.
Chapter 11 is not necessarily the end of the story.
Right. I mean, you think of General Motors, and a lot of big companies have declared bankruptcy, and then they've recovered, and their stock is trading.
I've done it 2 or 3 times personally.
No, you haven't.
Someone of your exceptional credit score would not be someone
we wouldn't have you on the show.
Yeah.